Well, the Easter break has done nothing to calm investors' nerves, with markets taking another battering overnight. And once again, it's Spain causing an anxiety attack, with the government's plan to restore its budget failing to impress. Neil Woolridge reports for us.
Another day, another plea for calm from European leaders.
Le critère de 5,3% de déficit.
What was decided yesterday confirms both the Spanish government's determination to implement the necessary reforms and furthermore the Spanish government's commitment to respect the 5.3% deficit for 2012.
But whatever Euro leaders are selling right now, investors aren't buying. It was another night of red ink on global markets after Spain's unconvincing plan to turn around a big budget deficit sent the country's bond yields to a 4-month high.
One might argue that we've had a very strong run as well, for the last 2 or 3 months, and perhaps some correction was appropriate.
After a strong first quarter in 2012, the major global indices have tumbled between 4% and 7% in the past week, compared to Australia's relatively mild 2% fall. Aside from Spain's problems, investors are also worried about China's plans to trim growth to 7.5% this year. And the US caused a stir on Good Friday after its payrolls report came in well below expectations.
This is the most watched number on any calendar anywhere in the world. All of a sudden, when you don't meet expectations like last Friday, people become a little bit concerned.
Sentiment obviously was very poor in August and September last year, so it probably wasn't hard to surprise initially on the upside, and then we got to the point now where perhaps the consensus view is the US recovery is entrenched, so anything that challenges that will be poorly received.
Here in Australia, the local market continues to underperform, especially compared to the US. In part, that's due to the strong Australian dollar. But it's also because the local bourse is heavily weighted towards resources and banks, two sectors whose best days might be numbered.
There's a mild form of deleveraging in Australia. People are saving a bit more, so credit growth isn't so strong, so there's a lot of growth in the banking stocks. You've got the mining sector, which traditionally trades on a lower rating because they are price takers rather than price makers.
So UBS's head of wealth management, George Babouris, says many of the best investment opportunities lay overseas.
The emerging world will grow around about 5% this calendar year, the developed world around about 1.3, 1.4%, therefore earnings more explosive in the emerging world. Which companies are best placed to leverage off those earnings, and all those companies pretty much are based offshore.
A grim outlook for the domestic market then, despite Australia having one of the better performing economies in the developed world.